Hello and welcome back. Let's welcome in a very, very special guest now. Rob Subbaraman of Nomura is now with us, Head of Global Macro Research at Nomura. Rob, thank you so much for taking out time for us. It's always great to speak to you. You know, what do you make out of the macro data that's coming in globally? So, you know, whether you talk about US yields, earlier when it went up, markets were worried. Now when it's coming down, markets are worried. Markets are worried about inflation. What other central bankers will do? What is your view on inflation and global growth?
Yeah, firstly, it's a pleasure to be back on the show. Markets seem to be worried about multiple things right now. I think the uncertainty around the global economic outlook has increased. And I think it's a few things. So firstly, the jury is still out on inflation. Inflation continues to rise in the US and many other countries around the world. Is it temporary or not? Time will tell. But secondly, there is also, I think, concern that we may have passed peak growth and concern that growth could come off sharply further out. And maybe that's what the big sell-off or the big rally in bond markets is signaling. So I think that's partly related to the Delta variant and the concerns as that spreads rapidly around the world, but also later on this year and into next, concern, particularly in the US, that monetary and fiscal policy may not be as supportive for the growth, for the economy as they have been in the past 12, 18 months.
Hi Rob, good afternoon. This is Cheryl also joining in the conversation, and like you've mentioned, inflation is definitely rising across the globe, be it US or across the other nations. Whether temporary or not, time will only tell. But what are the bond markets actually indicating? What are the yields signaling? Is there a growth scare coming in, or what's your reading of that particular market?
I think the bond markets well, firstly, the bond yields have started. They have bottomed last week. They have started to rise again in the last few days. But I think they have predominantly been concerned around growth. I think that's the main factor that's new here. And, you know, as I said, that can be related to the Delta variant that is spreading rapidly in Europe and US now and other places. But also, as I said, I think dawning on markets that this exceptionally loose monetary and fiscal policy settings are not going to be lasting forever. At some point, they will start to normalize, particularly fiscal, and then growth could come back off. So I think that's the concern. I would say, you know, for us at Nomura, what we're watching most closely, and I think what's most important barometer for business sentiment right now is the Delta variant. And again, there's a lot of uncertainty. It really depends on the country, right? So if you're a country that has very low rates of full vaccination, and that's many emerging markets, you're very exposed to this much more deadly variant, Delta variant, than previous variants. And that can cause, you know, your health system to be overrun, as India had experienced. And then you've got no real choice but to start to impose lockdowns again, which hurt the economy and growth. But the difference, I think, is in the advanced economies. So I'm talking here about Europe and the US in particular, where it's spreading. Their vaccination rates are a lot higher, right? Roughly, you know, close to 50% of the population is fully vaccinated, and that's going to go up. And so it's not clear at this point that the death rates are going to go up this time. Maybe vaccinations are going to help keep a much smaller share of the population critically ill. We'll still have a big wave of people, getting infected, particularly young people. But in terms of the fear factor of, becoming very deadly, it could be very different in this wave. And that could allow economies to remain open, and it could raise hope that this is the final stage of COVID. I think that's critical. And I think the thing we're watching most is the UK, because it's most advanced in this Delta spread. Interestingly, in Scotland, the cases are already coming down. We're watching England very closely. If England cases start to come down, the wave starts to ease, I think that'll be a very positive sign for the rest of Europe and US.
Right. Do you think for India, inflation will be good? Will it lead to better earnings growth, which has been missing for a while, or for the entire emerging markets pack actually that?
I think there's different types of inflation, right? Is it being driven by strong demand exceeding supply, or is it cost push inflation? And I would say right now in India and most countries around the world, it's probably a bit more of the cost push inflation, right? A lot of commodity prices have gone up a lot. There's semiconductor shortages, supply bottlenecks. So I think, to me, this is not the good type of inflation at the moment. And I think it can be a kind of compression on profit margins. I would say, in India, where it's above the RBI's target range right now of 2 to 6%, we are concerned that in India, this inflation could turn out to be more sticky than most people think. Commodities make up a large part of the CPI basket in India. We think this commodity price upturn has legs. But also inflation expectations in India have been rising. They're now 1 year ahead. Inflation expectations are back above 10%. And, there is the risk that if inflation stays high for a while, it continues to feed into inflation expectations, and then it can start to get more sticky and stay high. That's the concern we have. And that's why we think once the growth side of India's economy rebounds, and we think it's going to rebound strongly, the RBI is going to have to move to a hawkish pivot.
Rob, you've actually kind of answered my next question. I was going to ask you about what do you think the RBI will do, given that if inflation definitely indeed remains sticky, like you mentioned, the RBI will turn hawkish. But how soon do you see this sort of move coming in from RBI then?
Well, I think right now the RBI is right to talk about this transitory hump and really at the moment just focus on growth, right? The priority right now is to get the economy back on its equal footing, right? It's just come out of another major health crisis. It's been locked down. It's very important for policies to support the economy right now, and I think RBI is doing a fantastic job at that. But our view is that the economy is rebounding really fast now. Our business resumption index, made up of a lot of fast indicators, is back at around 96%, so very close to pre-pandemic levels. It got down to as low as 60%, so it's been like a V-shaped recovery, and that's going to feed through over time. That's a leading indicator. That's going to start to show up over time in broader activity measures. So, as we get into the fourth quarter of this year, calendar year, so, September to December, October to December, we think growth will be a lot firmer. Inflation will still be sticky, and that's going to then cause the RBI to move to this hawkish pivot. We think initially it's going to be withdrawing liquidity. So we have the reverse repo rate rising by 40 basis points between October to December. And then as we get into 2022, we think RBI will start to normalize the key policy, the interest rate, the repo rate, we expect 75 basis points of rate hikes next year, 3 rate hikes. It might sound a lot, but I look at economies around the world. I can tell you that in many emerging markets now, interest rates have already started going up.
Right, absolutely. Point taken, Rob. Thank you for joining us on the show and giving us your take on the macro situation across the globe as well as India. That was Rob Subbaraman from Nomura, saying that they expect RBI to hike rates by about 75 basis points next year, and inflation is likely to remain sticky, and that would actually cause a concern, and that may actually force the RBI to turn hawkish as well. All right, but on that note, we'll slip into a break on this edition of Markets at Noon, but stay tuned, more on the other side, so don't go anywhere.